So my people, how are you doing? So I want us to talk about the low hanging fruits or bit by bit objective, okay? So one of the things that was a hindrance in my growth when I was starting is that I always thought that you're supposed to make money on these big moves, okay? But as I was growing up as a Forex trader, I came to realize that you don't have to enter some big runners to make good money, okay? All you have to do is think in terms of percentage. How do you think in percentage? The one and the most important way to think in percentage is to look in terms of percentage gains, in terms of, let's say, risk to reward, and just make sure you use a risk to reward that is most likely to be achieved, okay? And one of the ways that I came up with this is because I tried holding up trades for so long, but it always went up, then came back to my entry, okay? And this was one of the things that led to me discovering the 1:2 risk to reward protocol, okay? The 1:2 RR is not the first time I know you're hearing it. You know, you've heard about it from so many people, but have you ever asked yourself why 1:2 is so much quick to be hit compared to other RR, okay? For me, it's because it's not a high objective, okay? It's just a low objective, by which if you can do that consistently, target 1:2 consistently, you can make good money with it, okay? And once you lose, you can always come back later and target your 1:2, compared to you targeting 1:7, 1:10. You can be there trading and the market says, oh bro, I ain't going up to 1:7. But price can go up to 1:3 and reverse. I know you've been seeing that in most pairs, okay? Recently, price have been consolidating for so long. Most importantly, the currency pairs, okay? And one of the things that I love about 1:2 RR is because these targets are so minute that you can clearly get in, stay in the markets for a few minutes, and then get out, okay? That's why I advise people to use 1:2 RR, okay? There's a friend of mine who was using 1:10 R, okay? He used to have big runs, but you'd always find him like getting like 5 losing trades before he could get, like, let's say, like one good trade, okay? So he will lose 5% trying to catch like 1:10, and then on the 6th trade he will catch, let's say, like an RR of 1:7, okay? Once you do your maths, you come to realize that this boy is just up like 2% after losing like 5 times, okay? And once you adopt the 1:2 RR, you find yourself like you're winning most of the time compared to the times that you're losing, okay? And this is one of the things that most people don't tell you, okay? Most people don't stay in these markets for long. Most people get in, get out. I didn't say that they are not people who stay in these markets for long, okay? There are those people who stay in these markets for long, but most people prioritize day trading in terms of low-hanging fruits, getting in and getting out, okay? And this thing is so important because it helps you cover your losses quickly, okay? Once you start adopting your mindset to this analogy, you'll find yourself like having more winners compared to losses, you know, because you're not overstaying in the market. And once you are in losses, it tells you right away. You don't stay like 2 days to understand that your loss came because of this and that, compared to these long runners, okay? With one thing with these long runners, they stay in the market for long. You can see the market coming to your entry, going up again, coming to your entry again, and then going up. See, that up and down is so tiresome. Personally, I'm speaking for myself. Personally, I don't love staying in the markets for long because I don't see the need for the market to give you 1:3 reward. I mean, 1:3 reward. Then you don't want to take 1:3 and then you close you're in a loss, and you see, and you could have just pocketed, let's say, the 3% returns, okay? And I know most people, once they hear me saying this, they'll just be like, no, please, everyone has their own strategy. Yeah, I know everyone has their own strategy and their own way of trading, okay? But this is just my this is just my view on the market and what I love using, okay? Because I don't feel comfortable trading in this condition where you have to stay in the market for like 5 days. Most importantly, if you are an upcoming trader, okay, you won't have that capacity to hold those trades. But if you are experienced, you can hold. If you are experienced, you have the resources, you have everything. It's easier for you to hold those trades overnight, over the weekend, and even maybe for a month, okay? But for those upcoming traders with little to no experience or a few years experience, I advise them to just take 1:2, 1:3, and then close your position. You can always come the next time and trade again, okay? So it's not a sprint, it's a marathon. Bit by bit, we get to the goals, okay? And if you've noticed, tell me, how many times have you entered the market and you got stopped out after the market's giving you some profits? Even you can find that the markets give you like 2 times your risk. Let's say you risked like $50, the market gave you up to $100, okay? But you didn't close. And that was a quick 2-hour trade, okay? You could have just take the 2-hour and came later again, take your 2-hour. After 4 trades, you're 8-hour up, okay? And that's compounding, and I always prefer compounding. You know one thing about compounding, once you start taking these little by little objectives and hitting them, those habits stuck, okay? Those habits stuck in your life and also in your trading career. Once you aim for little by little profits here and there, you take like 100 here, 100 there, 50 here, 50 there, 200 here, 200 there. You come to realize that at the end of the month, your returns are so big compared to maybe having 1:10 hour trade, where sometimes it even consolidates and you are like, why is this market consolidating right now? Why is this? You become astonished, you become greedy, you start, fear starts to creep in, and you end up collapsing the trade. Maybe you are back to break even, or even maybe in a loss, okay? Or the market comes and hit your stop loss. We all know how it goes. So if you are a new trader, please, if you are a new trader, don't hold your trades. They'll say I'm misguiding you, but please don't hold your trade. Just get into the market, get what's yours, and get the fuck out of there, bro. Yeah, that's real talk, man. Go inside, take what's yours, and get the fuck out of there, bro. This is a market of cannibalists. They'll cannibalize on you if you don't do that. So make sure you take your minor targets and get the fuck out of there, bro. Because once you don't do that, the market will come and cannibalize on your profits plus your risk. And always know this. The first rule of the game is to always protect the capital. The second rule of the game is to always pay the trader. So protect your capital, pay the trader. Once you protect the capital and pay the trader, it becomes easy, okay? And that's the thing that I've realized in the 3 years in this game, okay? And I hope you've enjoyed this, and until next time, it's Kev.